Okay, this is the first video in the third trading strategy, which is called the Daily Retest. And again, it uses the same concepts of supply and demand that we've used previously. It's very much like the FTB strategy, but it's designed for higher time frames, and it's the immediate retest rather than the arc-like return. Okay. So what I'm looking for is a breakout of an SR. Okay, and a breakout being a close above previous closes within the SR, whilst clearing supply and demand represented by bar wicks within the SR. That will become clearer when I show some examples. And then I'm looking for the immediate retest. Okay, so why the immediate retest on a daily or higher time frame and not M5, H1, M1? Well, the reason being is if you compared pure immediate retests on, for example, M5 to a daily time frame, considering nothing else, you would find that the daily time frame would have a higher strike rate, a higher probability of holding than the M5. Okay, and the reason being is that there is a higher market participant count watching the daily time frame than there is M5. If you're a daily time frame trader, you obviously watch the daily. If you're an M5 and you don't watch M5, but if you're an M5 trader, you most likely do watch daily as well as M5. Okay, so the higher the time frame, the more market participants that watch that time frame. Okay. Most short-term traders trade according to bias as part of their plan, in terms of that if they see a breakout on a daily time frame, that gives us a bias for that day in terms of they're expecting that breakout to hold. Therefore, they look for directional trades in the direction of that breakout. Okay. So that's one reason why the immediate retest holds. So there's a higher chance of holding on a daily time frame, because more people are watching that time frame, and more people base their decisions on that time frame and view the breakout in terms of giving them a directional bias for the following trading session. Okay. The second reason is if you consider the sentiment and buying or selling power required to cause a breakout of a daily SR compared to an M5 SR, it's obviously much higher on the daily time frame. And in terms of sentiment, it takes a lot more sentiment, okay, to drive a breakout on a daily time frame of a key SR than it does on an M5 time frame. In that respect, an M5 time frame is just a blip compared to the daily time frame. Okay, it requires multiple traders to have the same sentiment approach in terms of reasoning to buy or sell than it does on an M5 time frame, in terms of the strength it takes to break an SR on M5 compared to break a key SR on a daily time frame. Okay. So normally a breakout on a daily SR involves a sentiment change or sentiment continuation enough to overcome supply and demand that is represented by that SR, and therefore you're looking for the same continuation of that sentiment. That's why we're looking for the immediate retest and not the arc-like retest. We're not looking for unfilled orders and things like that. We're basically looking for that same sentiment to be present, and that's obviously going to be present the quicker the price comes back, rather than looking for the arc-like FTB. Okay, that's why the immediate retest has a higher chance of holding on the daily time frame. Those two reasons: the sentiment that drives the breakout, and the market participants that view the daily time frame and use it for a directional bias in the next trading sessions. Okay, so we're looking for a clear SR which has clear history as an SR. Okay, most of the time it will be governed by bar closes. Okay, not always. We have to be objective and logical in everything we do. So we have bar wicks that are very concise, then that will be the SR. But we're looking for SRs mostly governed by bar closes, and we want to see a clear breakout bar with a close above previous closes within the SR. So a close above the SR and above the most recent wicks. Why? Because the most recent wicks represent supply and demand. Okay. And then we're looking for the immediate retest. Now I say between 1 to 3 bars, it could be 4 or 5, but I'm looking for that continuation of that sentiment that caused the breakout. Therefore, I want it as soon as possible. Okay. So if we look at a few examples, again, okay, so we can see a clear SR represented by these bar closes and these bar lows. We have a very strong breakout bar. It's a mini kind of wedge, breakout bearish wedge. But we have a very strong bearish bar. We see it's a 2 bar bearish outside bar, which doesn't, not really that important, but It's a very strong bearish bar, and it's a very strong breakout. It's a very clear breakout above the previous closes and below the SR, and importantly it's below these wicks. Why is that important? Because these wicks represent demand. It's the most recent price action history at this area. They represent demand, so we need to see that cleared. We don't need to see this one cleared because A, it's far in the past, and B, we can always use that as a target because we're trading back on the immediate retest, and that could be a legitimate target in terms of looking for demand. Okay, but the most recent price action history is here, so we want to see all that demand cleared, and we want to see a confirmed breakout, and we can visually see that this is easily a breakout below the SR, and then obviously we're looking for the immediate retest. Same here, not the clearest SR you're going to see, prefer more history most of the time, but again, if you look at this bar low, the symmetry with these bar closes, that forms the SR. We want to see a close below the most recent demand represented by those wicks, and then we want to look for the immediate retest. And again, you can see this is a very strong bearish bar leading into the causing the breakout. Third example, we can see again wedge-like pattern, strong bullish bar. It closes above the most recent price history. It closes above the bar closes. It closes above the most recent bar highs. It doesn't close above this bar high, but what it does is it consumes the supply within this bar wick. Why? Because it's moved above it, so therefore it's consumed the supply there. So that gives us confidence to know that we've actually cleared all the supply within this area and including that area, and then we can target a higher move, okay, on the immediate retest. But again, it's a bar closes, which is important, and the fact that the overall area has been obviously very clear resistance in the past, so we need to make sure that all this supply represented by the wicks has been consumed. Final example, a very clear bearish wedge here, very strong breakout bar below the previous bar open closes and below the most recent bar wicks in terms of the demand, nothing else to the left, extremely clear. Now this one comes back 2 bars later, which is fine because the breakout is so strong and so far below the SR that to expect it to come back on the next bar, you wouldn't necessarily expect it to come back on the next bar. So coming back a couple of bars later is fine because you could still look at that and say, well, we've still got the same sentiment that caused this breakout because this is a very clear bearish picture. So I'm quite happy to trade that on the second, third bar back, and you can see we had a very strong trend continuation move, which isn't a surprise considering how bearish this wedge looks. Okay, well, that's it for the first video, just a short video. So just outlining the basics of the concepts behind the strategy and what is the basis of an entry in terms of what we're looking for in terms of a setup. Okay, the next video is going to go over other considerations we need to take into account. There's a few of those, and the final video will go into trade management, where we're going to be using our past supply demand concepts and decision points to establish entries and stop losses.